If you've ever been in crypto, you know exactly what I'm talking about. That feeling of watching your portfolio just turn blood red overnight. Well, today, we're going to dig into a really powerful mental model for dealing with those crazy price swings, one that could totally transform how you see all that chaos.
Just picture it, right? You're sitting there, it's late, and the only light is from your monitor. And the charts, they're just a sea of red. Bitcoin's tanking, your altcoins are getting absolutely hammered, and you get that sinking pit in your stomach. It is a universal, gut-wrenching moment for literally anyone in this space.
And this is Alex. He's kind of our main character for this story. And his reaction? It's probably one you've heard before or maybe even said yourself. It's that moment of just pure frustration where you think, that's it, I'm done. I'm trading this all in for a boring old index fund. The stress just doesn't feel worth it anymore.
But here's the question that changes everything. What if the very thing we all see as crypto's biggest, most obvious flaw, its wild, unpredictable volatility, is actually something else entirely? What if we've been looking at this whole thing completely backwards?
Okay, so let's get inside Alex's head for a minute. From where he's sitting, every single one of those red candles on the chart feels like a personal attack. It's just loss, it's stress, and it's a giant flashing sign telling him he made a horrible mistake. To him, volatility is the enemy, period.
You can see his internal conflict so clearly here. He's completely torn. I mean, on one hand, he's terrified of the losses, and he's definitely dreading the "I told you so" he's going to get from his sensible brother. But on the other hand, he still wants those life-changing, insane returns that got him into crypto in the first place. He is literally trapped between fear and ambition. So just as Alex is about to give up, just as he's ready to throw in the towel, a chance encounter introduces him to a totally new way of thinking. And this is where the story and our whole understanding takes a very sharp turn.
This single question from a mentor figure named Rory is just brilliant. He doesn't ask about the money. He doesn't ask about the numbers. He asks about the psychological cost. He immediately gets that the real damage isn't just to the portfolio, it's emotional. It cuts right to the absolute heart of the problem.
And there it is, the big idea, the disruptive thought that flips the entire narrative upside down. Rory suggests that this chaotic force isn't a bug in the system. It might actually be its most important feature. And this is the core concept we are going to unpack right now. Okay. So how can something that feels so destructive possibly be a gift? I know, it sounds like a total paradox. But let's actually break down the mechanics here, using the specific crypto Alex happens to hold, which is called Pulse Zen. So here's the crucial piece of the puzzle, this built-in system. Think of it like a little tax on every single transaction, whether you're buying or selling. But the proceeds from that tax don't go to some central company. Nope. They get distributed proportionally to every single person who is simply holding the token. And here's where it gets really interesting. Let's connect the dots. The market swings up and down, right? That causes panic and greed. Panicked people, they trade a lot. And every single one of those trades, which is driven by emotion, triggers that 2% fee, which then gets paid out to the long-term holders. So the very chaos that scares people away is actively rewarding the people who stay. Their token balance just grows automatically.
I mean, this quote just nails it. Volatility isn't a flaw, it's the fuel. The market's instability is the very engine that drives the rewards. Without all of those wobbles, the engine would just stall out. It is a profound shift in thinking.
So once you really get that volatility can be a productive force, your entire focus changes. You stop obsessing over one thing, the price, and you start paying very close attention to something else entirely. And this really leads to two completely different mindsets. So you have to ask yourself, which one are you? Are you the impatient tourist, obsessed with today's price, trying to time every little move? Or are you the patient settler, focused on the underlying mechanism, with a long-term view, who sees all this volatility as just the price of admission? You know, Rory's analogy here is pretty blunt, but it really gets the point across. Getting mad about volatility in crypto is like being shocked at people throw punches in a boxing ring. It's just part of the environment. The key isn't to wish it would go away, but to actually prepare for it.
All right, so all this theory is great, but how does this new mental model actually translate into action? Let's see what Alex does next, because, information is pretty useless if you don't apply it.
Instead of panic selling, Alex reorganizes. He actually builds a structure. He creates these 3 buckets for his money, and he puts his crypto firmly in the asymmetric bets bucket. This separates it, emotionally and financially, from his safety net. Then he starts seeing red days as opportunities. And, this is crucial, he shifts his focus away from the crazy dollar value and onto his steadily growing token balance.
And this is the real transformation. The fear doesn't just disappear. I mean, that would be totally unrealistic. But now it has a companion, curiosity. He's no longer just a victim of the market, he's an observer of the mechanism. The crash becomes a data point, not a final verdict.
And here we go, the punchline from his skeptical brother Dan. It just captures the whole journey perfectly, doesn't it? Alex has gone from being a gambler, just hoping for a lucky number, to a strategist with a clear, yeah, maybe risky, but clear thesis about how this whole system works.
And really, that's the ultimate goal here. It's not about finding an investment that never goes down. It's about finding a personal narrative, a story you can tell yourself that is strong enough to handle the chaos. It's a framework that can hold both the terror of the risk and the beauty of the opportunity at the same time.
This final analogy just brings it all home. Volatility is like the weather. It's a force of nature that's totally beyond our control. We can't stop the storm from coming, but we can choose how we react. We can either run and hide from it, or we can try to find a way to harness its power.
And so we end up right back where we started, with this really powerful question. After seeing how a mechanism like this can work, how a simple change in perspective can change your strategy and even your sanity, how do you see it now? Is volatility a bug to be feared, or is it a feature to be understood?